Greetings, my name is Ted Hicks. I'm the founder, CEO, and Chief Investment Officer for Hicks & Associates Wealth Management. Today is Friday, July 8, and the market opened about 7 minutes ago as I began recording this. But about an hour ago, the monthly jobs report was released, and it showed that the economy added 372,000 jobs in the month of June. That is above economists' expectations, so that is very good news indeed. But that's not the purpose of today's video. What I want to talk very briefly about is inflation and inflation expectations. So there's good news, bad news here today. If you've been watching these reports, you know that inflation has been about 8.5% year over year. That's the official measure. And there's beginning to show some indications that that may very well have peaked. Again, 8.5% is approximately a 40-year high. However, if we look at the stock market, there is some evidence to suggest that inflation may have peaked and may begin to be coming down. So first, what I want to do is look at energy. This is the energy sector ETF XLE. Again, if you've been watching our videos, you know that energy is one of the bright spots for the stock market in 2022. And so on the bottom pane, I've got the S&P 500. And again, right about here is the beginning of the year. And so as the S&P 500 is going down, you've got the energy sector as going up. That's been the bright spot. However, this has been the month of June. So there's been a pretty big correction in the energy space. But then I want to look at some of the commodities as well. Energy is also a commodity, and that is a very big inflation sensitive sector. And so this is an ETF that tracks lumber and lumber related stocks. And you can see this wood, W-O-O-D, has come down approximately 23% from its recent high. This is wheat, down approximately 35%. This is the price of oil, down about 22%. And this is a broader commodities ETF, down about 22%. And then the price of gold, down about 12%. Now this is April 15th. But all of these, here's silver, down about 26%. And then I've got the price of corn down approximately 23%. All of these are indicating, all of these commodity corrections, if you will, are indicating that inflation may be starting to come down a little bit. That's the good news. The bad news is we see both the Federal Reserve officials and the European Central Bank officials talking about the fact that they no longer believe returning to a 2% low inflationary regime is probable. And so in particular, I'm going to read something very brief from the most recent release of the Federal Reserve's board meetings from their minutes. In particular, it says this, and I'm quoting here: members judge that with high and widespread inflation pressures and some measures of longer-term inflation expectations moving up somewhat, it would be appropriate for the post-meeting statement to note that the committee was strongly committed to returning inflation to its 2% objective, as the further firming in the policy stance would result in slowing economic growth and tempering in labor market conditions. Members also agreed to remove the previous statement language that had indicated an expectation that appropriate policy would result in a return of inflation to 2% and a strong labor market. So the Federal Reserve is removing language from their statements that suggest that they expect us to be able to return to a 2% inflationary target. So the good news is it seems that inflation is beginning to come down. It seems like the jobs market is improving, but the Federal Reserve and the European Central Bank are in alignment in saying that a return to 2% inflation is not a very high probability, not in the near term. So again, both good news and bad news. Hope you found that helpful. Again, if there's any questions you might have, feel free to reach out to me or my team. Make sure we put our contact information up on the screen, and hope you have a great weekend. Thanks for watching.